So you officially elected S Corp status for your business, but you have no idea how to set up payroll to pay yourself as an S Corp owner. If that sounds like you, don't worry. In this video, I'm going to walk you through each step on how to set up S Corp payroll the right way so you can pay yourself correctly and stay in compliance with IRS rules. This is a simple, beginner-friendly guide, and by the end of this video, you'll know exactly what to do to start paying yourself through payroll as an S Corp owner. Hey, it's Sherman with My CPA Coach, where we guide business owners to more tax savings and less stress. We advise a lot of our tax planning clients to set up S corporations for one simple reason: to avoid the 15.3% self-employment tax. If you earn ordinary income from your business and you are not an S Corp or C Corporation, then you may be subject to thousands of dollars more in self-employment taxes that could instead be reinvested back into your business. For example, if you earned $100,000 in business income, then technically you would be subject to over $15,000 in self-employment taxes. So the strategy to avoid this is normally to elect S Corp status. And if you haven't done this already, then make sure you subscribe to our channel for more information on how to do this. Now, once you elect S Corp status, you are required to pay yourself a reasonable amount of compensation, and that compensation must be paid through a payroll system, which means that those wages will be subject to payroll taxes. It's basically the government's way of recouping some of the tax they would have otherwise collected from the self-employment tax. However, instead of paying that tax on 100% of your business income, you would just be paying it on the wages you are taking from your business, which is normally much less than your total business income. With that being said, if you're watching this video, you are most likely interested in learning more about how to set up payroll to start paying yourself wages as an S Corp owner. So now that I've set the stage, let's go ahead and jump right in. Step 1. Choose a payroll provider. The three most popular payroll providers for small business owners are QuickBooks, Gusto, and ADP, and prices normally range from about $20 to $100 per month, depending on the type of payroll plan that you're interested in. Now, regardless of the payroll plan you sign up for, there is one big thing that I always recommend my clients to do, and that is to make sure that your plan includes automated taxes and forms. This means that your payroll provider will take care of calculating, filing, and paying your payroll taxes on your behalf. And trust me when I say this will make your life so much easier. When you manually file your payroll taxes, not only will it take more time for you to manage, but it can also be extremely costly if you make one single mistake. Many years ago, I used to manually file and pay my own payroll taxes, which I normally submitted on time, but one time I filed my payroll tax return just one day late, literally one day late, and I was charged over $1,000 in penalties. So as you can imagine, I immediately switched to a full-service payroll plan, and I have not been late since. I strongly recommend this to my clients so they can spend more time on their business and not on administrative tasks. Step 2. Set up state and federal accounts. Once you pick a payroll provider and activate your account, there's another big step to take, and that involves setting up accounts with the appropriate federal and state agencies, which will then provide you with an account number that you will link to your payroll account. As it relates to your federal account, you will just need your employer identification number with the IRS, and if your business has been in existence prior to forming your S Corp, chances are you already have this number, and you can find it on your last year's business tax return.
But if you do not have an EIN, then you can apply for one directly on the IRS website. Now, regarding state accounts, every state is different. In most states, there are two accounts that you need to set up: a withholding account and an unemployment account. However, in some states, this is handled by one agency. Your payroll provider should provide you with the direct links on where you can register for these types of accounts in your state. Once you register and complete your application, you will either receive your account numbers instantly or receive them by mail once approved. Keep an eye out for this, because if your account numbers are not added to your payroll system, the appropriate agencies will not receive the payroll taxes you are withholding. Step 3. Add account numbers to payroll settings. Once you have your federal and state account numbers, you will need to add them to your payroll settings. You would log in, go to payroll settings, add your federal EIN number, and then add your state account numbers as well. It is very important that you add the correct state tax rates here. Sometimes payroll providers use default rates, which may not match your actual rates. If this happens, you could overpay or underpay payroll taxes. To confirm the correct rates, log into your state account or review your approval letter. This step is simple but very important. Step 4. Add yourself as an employee. Now that your payroll account is set up, you will add yourself as an employee. Enter your personal details, including your address, birth date, social security number, and tax filing status. You can also choose your payment method, which is usually direct deposit. And finally, you will enter the salary you plan to take as reasonable compensation. Step 5. Determine a reasonable salary. The IRS requires you to pay yourself a reasonable compensation based on the services you provide to your company. They look at things like your experience, your duties, the time you spend working in the business, and how much the business makes. You can use job sites to find comparable salaries, but your salary should also make sense based on your business income. For example, if you would normally earn $100,000 in a job, but your business only makes $80,000, you should not pay yourself $100,000. Many S Corp owners pay themselves a fraction of their business income, which is the point of this strategy, but you still need to pay yourself something reasonable. People get into trouble when they elect S Corp status and pay themselves nothing at all. Step 6. Start paying yourself. Once you've added yourself as an employee and chosen your salary, you can start running payroll. You simply log in, click Run Payroll, and your paycheck will be calculated automatically, including taxes. You can run payroll weekly, bi-weekly, monthly, or on whatever schedule you choose. Many payroll providers allow you to automate this. Step 7. Make sure automated taxes and forms are turned on. After running your first payroll check, check your payroll tax reports. Make sure automated taxes and forms are turned on. This ensures your payroll provider files and pays payroll taxes for you. You should also confirm that your payroll system is scheduled to pay and file your federal and state taxes automatically. Once this is set up, running payroll becomes very easy, and you won't have to worry about missing deadlines.
Now that you've seen all the steps, remember this. Running payroll for your S Corp doesn't have to be stressful. Once your accounts are linked, your salary is set, and automated taxes are turned on, everything pretty much runs on autopilot. Pay yourself a reasonable salary, stay compliant, and let your payroll system handle the rest. It's that simple.
That's it. Once this is set up correctly, running payroll as an S Corp owner is simple. You'll just log in, run payroll on your schedule, and your taxes and forms will be handled automatically in the background. If this video helped you, hit the like button so more people can find it, and subscribe for more simple business and tax tutorials. In the next video, I'll show you how to do this step by step inside QuickBooks Payroll so you can follow along on your own screen.